Happy 4th of July. I think that the real fireworks may start on Friday, actually. So let's get into some stock market analysis. Let's get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward, looking at AMC and GME as well, because we have some things popping off on that side of things. So let's just jump right into it. We got those daily expected moves for you up here at the top. We have 554.32 and we have 548.60 to the downside. Remember, this is our 68% zone. We ended outside of it yesterday, okay? On the 3rd, we ended outside of it. Today, we have the day off for the 4th of July. Go celebrate with your family. And right here now we have some daily expected moves for the Friday close. So because we ended outside of it, hey, I'm thinking we probably do end up in this zone by the end of the day. So we'll find out about that. Remember, this purple line here is that weekly expected move. So landing in this area on Friday would make 100% sense at this point. We're going up towards a weekly expected move. Maybe we're going to see a pullback. So let's talk about some scenarios here that could be happening. First off, on the 2 hour, I just want to start off by saying this right here is bullish. You're breaking through a key level. Everything looks great. You have the swing trade up. Awesome. Everything looks good here, except for the fact that it's getting very overbought very quickly, okay? We're already overbought after just a couple days worth of buying. So unless daily momentum wants to take over, but at this point, what you want to pay attention to here is if it's going to go higher, that upside expected move. That's really as bullish as you can get going into Friday. And then you want to always be prepared for this guy right here down on the MACD to curl over, And that's because at this range, because we got excited, we did not get that pullback that I was talking about in order to head higher to remain healthier and then extend over time. Well, this has a good probability of playing out on Friday, curl down on the 2 hour, and we might see some bad things. Now, that doesn't mean this has to happen. So this is overall a bearish case. I believe that from this area, we really need to pull back, especially if we get excited. I'm going to say, we might be getting this to confirm and going negative on the 2 hour. But when we look at this, there's another scenario that comes to mind. The 30-minute, a lot of the time in order to turn over a 2 hour chart, you need some form of 30-minute divergence. So on the SPY, what if we actually ended up coming down to that daily expected move and curling back up? What that would allow to happen is you get close to that center line for that swing trade and we would no longer be in those overbought positions anymore. And then maybe we go and create some kind of divergence next week with a weekly expected move, which we give out every single Sunday. So make sure to join back. Make sure you're subscribed because we put out videos over the weekend as well. And if you're interested in learning about the MACD, RSI, and all this kind of stuff, how we actually trade around these ranges, what these ranges are, how to manage your trade, how to manage your risk, all of that stuff is in the course, and it is only $100 until Sunday. You literally just have a few days left to grab it. Dedicate yourself to some learning before that price goes up. So let's switch over to the Qs because it's a similar scenario here. And why the Qs would make sense in this happening is because look at that 30 minutes way up there. You don't have divergence or anything like that. Extremely bullish, but very, very overbought. That light volume, I think that this overall is some kind of rigged move to pay for some of the problems that are going on right now, which is the GME, AMC, and now Koss, right? We have Koss really starting to pop off, going from $4 to almost $20 in just a few days. Very, very interesting there. So what do we need to pay attention to for the Qs though? Even if this is a rigged move, how could they really trick you? Well, I think it's if they pull this down to the center line. I actually think this is the most likely scenario going into the end of the week, but we'll pay attention to this. This is a very strong move, but you notice that that would allow you to make some kind of divergence, which could then roll over a 2 hour chart. So let's see if that 2 hour chart needs to roll over for at least some kind of pullback. And what do we see up at these levels? We're actually seeing a point of divergence being formed. So if that 30-minute curl down actually crosses over this 2 hour and that goes negative, you could be starting some kind of negative trend over time. So pay attention to that as of right now. But just to be very clear, your indicator is still saying bullish. This has not happened. The 30-minute has not curled over, so it's still saying bullish. So what can we pay attention to? Well, we got to pay attention to, since we have those daily expected moves, we do have 494.91 to the upside, and we do have 487.17 to the downside. So that 30-minute, this area here, you have a weekly move and a daily move right there. And a lot of the time you'll use that weekly in order to bounce off of if it's a 30-minute roll back up. So pay attention to that. But for now, to the bear side, you really want to see if these things start rolling over and if they are confirming another upside move like on the 30-minute, or if this 2 hour is actually able to cross over and go negative. I think that that would be a bad sign, as we did get way overexcited in the Qs. So pay attention to that, because you are outside of the weekly expected move. You have a 68% chance to land down in this area by close. So the perfect place to actually land by the end of the day is this little tiny box right here between 487.17 and 488.12. So that's really what you have to pay attention to for the Qs here. Now, as we move forward through Apple's another one that got a little too excited, and you see the divergence forming at these levels. Now, this at least gave us a little bit of a pullback, but I really would like to have pulled back at this area here, seen that pull back, and then you can burst through going into next week. As of right now, that 2-hour rolls over. Not a good sign, but this is a bullish sign right now. I want to be very clear. When the indicator looks like this, it's bullish. It just means, hey, if I got in now, I'd be chasing. And so I'd want to look for, even if I'm going to be bullish here, I want to look for a 30-minute pullback. As of right now, you're getting kind of some sideways movement, so pullback with time happening. But do we have a divergence in the nearest price action? We don't. So at this moment, are we going to quickly make one, pull back, maybe get a retest of these areas, and then curl back up? So the 30 minutes still very far away from the center line, so you can't necessarily say, oh, this is going to crash down into the ground. You have to more so say, this is a pullback until I cross that center line, and if I cross down below it and just curl right back up, well, then all of that was still just a pullback on the 30 minute, and that's what we're paying attention to for Apple. Now Tesla, crazy move. Now, something about Tesla that I researched back in the past was it actually used to have short sellers behind it, suppressing the stock. So I wonder if this is actually a sign of that suppression coming to light, and they're not able to suppress Tesla as much if they are still continuing to suppress the stock, because it's one of the stocks that has been dramatically down while everything else seems to still be hitting all-time highs. If we look at it, it's been dramatically down since its all-time high up towards what, $413 or something like that, and it pulled all the way back down to a low of 138. So as of this right here in 2021 all the way into now, what if there is a short selling problem? And that's why we're seeing this, because it's happening at the same time that it's happening with Koss. So this actually can be some kind of problem. Now I'm going to treat it like a regular stock right now. The weekly is turning up, trying to go positive, but getting overbought. The monthly turning over is really what you want to pay attention to as far as an investment goes, right? We need to put that out there on the course, which we're going to make a swing trading one as well, make it very cheap so you guys can learn about swing trading. It's very simple, and manage that risk. So what do we want to do? We want to dig into this, and right now you would just say, hey, if this is going to perform like a regular stock, then most likely you need at least a 2-hour or a 30-minute pullback to go higher, because this thing is just ramping up. And if that's a short seller problem, that can just keep going, because you're outside of the monthly expected move right here. So that's where you see crazy things happen. If it's happening early in the month and this has a short seller problem, that thing can start to rip. But for now, that monthly move, you have a 68% chance to land below that by the end of the month. That's very important to understand. We give that out on Patreon every single month. Now, the overall thing that I'm getting at here, something that would be good for Tesla would be some kind of pullback that gets you close to the center line. This would look good for a trader. This would look good for the health of the stock. And you could use the monthly expected move as some support going forward. But on the 30-minute, what do we notice here? It's never seen a significant pullback here. So we'll pay attention to that. If it's going to behave like a normal stock, then what would we say in order to not be chasing? Well, we would look for at least a 30-minute pullback that gives us a reason to take the trade, right? We talk about on this channel is about education and learning. We talk about how it is very helpful for yourself to have those checked boxes for your trade, and we give you those in the course. We give you the 3 to 5 reasons that I use to take a trade, and they seem to work very well. We're going to do that same thing and give you those reasons to take a trade in the swing trading course as well. But for now, $100 to get that course, and boom, this guy here needs to pull down, and maybe we actually see one more pop up, and then that actually proves to have some resistance with a 30-minute divergence, assuming there is no short seller problem in here. I think it's interesting to see that this is actually just ripping at the same time as some other short sold stocks like Koss. So maybe we'll look at Koss as well. Now, the 30-minute for Amazon, this is what we were talking about on the live show. That's right, we're live every single morning, so come join us, turn on those notifications. Live every single morning for the stock market when the market's open. Boom, we got divergence, okay? So we talked about the divergence here. The reason we're really paying attention to this at this point was because a divergence can lead you into negative territory. Are we negative yet? No, we're not. So we do still have that opportunity for one more turn up, but we'll see. But do you know where that weekly expected move is? Boom, right there. So weekly expected moves, they're a very helpful tool. You just need to know how to use them. So that's what we try to teach you on this channel. And if we go into a 2 hour, this is where things start to add up a little bit more dramatic downside maybe for Amazon, right? We're looking at the individual stocks and just following the signals. As of right now, you're seeing weakness in momentum telling you there is a bigger pullback coming. So I would assume that if Amazon is going to head higher, it needs to go grab some buyers at lower levels in order to turn back up over time, get close to that center line and curl up. I think that is the bullish case for Amazon at these levels. Is if you see a 30-minute turn up, okay, then that big pullback comes, or that big pullback could be happening right now that then bases out at any time, curls up, positive territory. Awesome. That's just a swing trade. So Amazon, is it fully going to break down from these levels? Most likely it will not. Most likely it will not, even though you have all these divergences across the way. It could. It has probabilities to do so, right? This point right here was not necessarily the best because look at that, we're defeating it. So we're taking away any kind of divergence because the RSI didn't get to overbought territory. But if you look all the way back from this high way over here, all the way up to here, we've seen upward price action. And what is the MACD telling us this whole time? Down, 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 right? So from this point across, if we start to turn down from here, which you're seeing a 30-minute and a 2-hour divergence, this here can go negative. Now, do I think that that's overall going to be the last push up? I actually think we maybe have one more rigged move up going on into the election time, to the end of the election cycle. So we're paying attention to some kind of pullback that then leads to some kind of bounce. And if we get that bounce, this daily MACD won't be able to stay negative long. That'll turn right back up. So I just want you to be aware of this because Amazon showing a little bit more weakness than other stocks. Now, Nvidia, this one here we talked about on I believe it was a 2 or a 4 hour chart. Let's look at a 2 hour first. We see the curling up of the MACD for one bar right here. And this is where you have to say, okay, if we get above, if we close above, I think I said like 126.40 or something like that. Yeah, 126.40, then that's going to be a bullish sign. What do? We close all the way above the wicks too. So this is a very bullish sign trying to go positive here. And the only problem is we have a weekly expected move kind of right above you. So it might be a time where it wants to consolidate. So let's look at this on a 30-minute. That is a good sign from the 2 hour, the 30-minute going positive, but you notice it is starting to get overbought. So if we go a little bit higher, we'll hit that weekly expected move. Maybe that then wants to back off in order to curl back up later on. That is the overall bullish take here. But I just want you to be aware that if that gets more dramatic and this is all a fake out, we'll get new weekly ranges if we start to see a flash down and then we maybe end at these type of levels. Well, you're going to get a weekly range that's a little bit lower. So if those weekly ranges start moving lower, you know the trend is overall down. All right, so what do we want to pay attention to here? Bullishness would be, hey, maybe we see some kind of pullback and then we turn back up because this thing's getting a little bit overbought. The bearish case would more so just be, hey, let's see, is this 2 hour going to actually, just roll over and start to see major downside in negative territory? Right now, everything looks pretty bullish for Nvidia, so pay attention. AMD, this one here, we were talking about the 2 hour as well, curling up, and if it is able to actually burst through the trend again, because it wasn't really able to, now you see it gets a little bit, just barely a higher low here, especially for the closing of these bars. But we notice that goes positive right here. So this bar here said positivity is the most likely option here, and boom, positivity came. So what are we looking for right now? Well, it's kind of rolling over, so we're either moving sideways or we're going to see some kind of pullback. Now, this was able to go decently positive here, so a pullback down to test something like 160.83 would make sense. Just note that the weekly expected move is higher up. So if we did pull back briefly and then we turn back up, that would make some sense. It just looks like, hey, this thing might be a little bit cooked. You're starting to see some resistance come in. I think we either move sideways or we get a little move down in order to head up over time. At least that would remain healthy. If we start to gap up, do some funky things up in this area, which we can because the daily side, right, the daily side just crossed up. We can see some big move up from AMD. I'm not unaware of that. I'm just saying by the end of the week, it looks like as high as you get is maybe that 169.58 if you see extreme bullishness. The 2 hour is by no means overbought in this area. So right now the direction is up for AMD. Maybe a 30-minute pullback is in the cards for you there. Now, Meta, this is one that I'm really paying attention to because it's not seeing the best buying, but it is above all the moving averages. That's important when you're looking at this from a swing trading perspective. You're above all of the moving averages on a 2 hour chart, and that's something to pay attention to because that's kind of the last signal you get is the crossing of the MACD. So that MACD crosses, okay, then we're probably going to see this high tested, or we go make a new one. And that might set up a triple divergence going into the weekend. So be careful with Meta if you see an upward move over the weekend. What would Meta do in order to remain actually healthy here? I think it needs to pull back on a 30-minute and base out. Now, this is a little closer to negative territory, which means the selling can start to increase a little bit. But if it's able to hold up a little bit better and turn right back up, right? We turn right back up. That would be a healthy move to make that second move higher. And then maybe over time next week, you start to see some kind of divergence by a weekly expected move. That's what I'm going to pay attention to for Meta. And I hope that all of this is making sense to you. If it's not, maybe you need to take that course real quick. But you can also come to the live show, ask questions, right? Ask questions about anything when it comes to indicators, technical analysis. We can look at these type of things for you. And don't be afraid to ask a question, guys. AMC, this one here, what did we say right when we've said this for ever since that big AMC pop? We've said this over and over again. If the 30-minute turns down, it is not the moment. Now, that doesn't mean we can't gap up. That 30-minute turns up and everything looks good. But for now, we told you guys early on this week, if this 30-minute at any time during this turns down, that means we are going to see a pullback. That's what I believe this is. Now it's getting a little bit more dramatic, so we'll see what happens with this going forward. As of right now, the 30-minute dramatically down towards that center line, so it's going to be a little bit of work to just flip this around. We'll see what happens going into Friday. And then the 2-hour. The reason that you need that 30-minute to turn up is because the 2-hour could turn down and you could see a more prolonged pullback for a little bit of time. We could head all the way back down to 437. I don't believe they want Friday to close above $5. I really believe they want to close below $5. They're losing money now because of Koss. And if we want to look at that real quick, by the way, we can look at this. Koss here going dramatically to the upside. Look at the daily scale here. We saw a little pop, we saw the consolidation, which doesn't this look a lot like some stocks that we just looked at? If we look at it, we got a big pop, we fizzle out for a very long time, but we hold that 50 and then we turn up over time and boom, look at this. So right here was the swing trade right on this bar right here. It said, hey, I'm going to have some momentum to the upside. Boom, that momentum comes. So there you go. Closing of this right here. Green bar on the MACD. Everything lined up for us here. Wish I was paying attention to it because that would have been a nice one. Went all the way up to almost $20 up here. I think it's up towards like 18 or 19. Yeah, about $19. So we went from 465 once that signal confirmed. This is pretty much what I'm getting at here is how important daily momentum is. Okay, that's the reason I wanted to show this. Daily momentum is important. This is a stock that has the same exact pattern as pretty much AMC and GME right now. The only difference is this one popped just recently. So pay attention to that. But the reason that I'm talking about it, AMC, very, very close on yesterday's trading to crossing on the daily side. And that is a very important thing. You notice this, look at this, initial pop, breakdown. The only thing that's different from the chart of Koss and the chart of AMC is AMC hasn't seen that major big run. So the daily hasn't crossed over. So the daily was able to cross over for Koss, and that was a huge, huge deal. At this moment, you'd have to say AMC needs to get that daily momentum to get positivity. And guess what? It's in positive territory. So if you want to back off for a little bit, that makes sense. But as long as this thing isn't going extremely negative, it's not dead, guys. GME, same thing. Look at this. Okay, big pop, little pop. Now we're just fizzling out. This looks almost pretty much identical to Koss at this point. Pretty much identical. So the only difference is it hasn't popped off. It hasn't crossed up and given you that daily momentum. So maybe we're going to see daily momentum here. And the reason for that might be actually because of the emojis, right? You notice that the 4th of July is here. The flag was the next emoji. And then the next one after that was a microphone, or they might have been in the same thing. But overall, I believe that means we're most likely going to see an announcement today. I actually think we might see an announcement tonight before that options expiration, maybe just showing the portfolio, right? A portfolio post from DFV. I think that would be very interesting. Keith Gill, Roaring Kitty, if he's able to post some kind of update, I believe that might actually happen tonight, because right after that, he says, I have an announcement. Look at this. Oh gosh, look at this. And then it's like everything's going to explode. So I think we're in game time soon, because these dailies are getting down to an area where they really have to curl up. If they don't curl up, then we're going to see this battle prolonged for even longer, and it could leak all the way into the fall. So that'd be interesting. Now, looking at the shorter time frames here, the 2 hour, this one here did confirm divergence. What do I say about 2 hour divergences? They like to roll up daily charts. So this is a time to really pay attention. Now, we've kind of just flagged up for some time, so we're going to look at a shorter time frame. But right now, this is telling you momentum has died out a little bit, and I have a good probability to go positive. So what do I want to pay attention to? Well, I need that to go positive. So if the 30-minute actually rolls down, you notice that's going to not make the 2 hour be positive, right? That means the price action is coming down. Was that able to cross as of yesterday? Well, it actually rejected the crossing. So as of right now, that's a kind of bullish sign, but you still want to always be aware of that just crossing over because it's right by that center line. Maybe it wants to make a little 30-minute divergence here, which can roll up that 2 hour, get that thing to reject, and then we see some major upside going into next week. I want you to be aware of these types of things because this is just what we look at as far as momentum goes. And then what do you need in order to see some kind of squeeze? Well, for this week, as far as Friday goes, you need to be above 27.66. That is when the gamma squeeze can really take over, and that gamma squeeze could lead to some kind of short squeeze throughout the day. So we'll pay attention to that. That's overall what you saw with Koss too, right? It gapped up and then it just kept going because it broke above these type of levels. 27.66 is the upside expected move by the options market, by the market maker. This is why I said this week and next week are most likely better days to pay attention to GME. You saw Twitter blowing up the whole time, telling you higher implied volatility, it means something big's happening. I am saying the complete opposite. I am saying higher implied volatility means that the market makers and the market maker algorithms know that something is trying to happen. But when that actually shrinks down, you have a shorter area that you have to make up in order to see that gamma squeeze, right? So last week it would have been, hey, we need to get above $30 or something from this price point right here. Now, because that implied volatility is lower, you only have to get above 27.66, and that can really take the market makers by surprise. This is why I say, why I said over the weekend, pay attention to GME, AMC, and everything this week because the implied volatility on a lot of these stocks is actually shrinking, which tells you, one, maybe the market maker is getting weaker. They can't, the short sellers and market makers, they're getting weaker. They can't suppress the stock anymore. And it gives you a shorter range in order to really see that buying beget more buying, which is the gamma squeeze. And then a gamma squeeze can lead into a short squeeze. A short squeeze would be they actually start to cover their positions in GME, and you're going to see this thing rocket if that happens. Just note that that's not happening because of a roaring kitty tweet. If this thing ever goes to $100, even goes to $80 again, that is not retail pumping a stock. That is not roaring kitty pumping a stock. If it goes above 100, if it goes above 200, if it goes above 300, that is people covering their positions. That is the short hedge funds that are actually causing that price action to happen. That's very important to understand. You are not liable for this, and you are not going to be the one that causes this to go to a $10,000 or wherever it's going to go to. It is the short hedge funds who now have to buy back all the shares and synthetic shares that will then cause this thing to just go berserk because they are naked shorting. They do not own the shares, and if they get margin called, if they have to produce those shares, they're going to be in a lot of trouble. They're going to have to put money into GME, and that is something to pay attention to. We mention this all the time with GME when we're talking about it because they're collateral is our stocks in the stock market. So you have to understand that as well. So that means the stock market could go down while GME and AMC and all of these short sold companies start to go up. And that's very important to understand. Now, lastly, I just wanted to take a look at the dollar. This is a real move up, by the way. This looks like a real move up. It looks like insiders were in this. Remember, we were mentioning there was insider buying before the stream started. We said, look at that downward move in the dollar. That means insiders are buying. So the probabilities are to the upside for the stock market for now. And guess what? They went up, didn't they? So things started to go up. And now what do we notice? Well, this thing's trying to curl back up, but we haven't seen that yet. So I'm going to watch this tonight and see if we see some kind of dramatic insider selling going on in the night market as people are distracted by the 4th of July, spending time with their families. How sick is that? People use spending time with your family as a distraction in order to maybe rip money away from you or pump stocks up even more. So we'll pay attention to this. If there's something I see tonight, when I'll just pull up my phone and check it every once in a while. If there's something on there, I will be posting it to Patreon so you are aware of it, guys. They like to do things. You see it every time. Look at this. 2 a.m., boom. Okay, if you go over here somewhere, right, 2 a.m., boom, selling. Right over here, okay, 2 a.m., boom, buying. So they do it in the nighttime so you don't see what is coming. We mentioned this first thing live and said the most likely direction is up for the stock market. It's a very, very cool thing to look at. Now, the last thing I just wanted to go over real quick was volatility. Volatility still holding this signal, actually trying to make a higher low on the 30-minute, but this is the signal to pay attention to. You have extreme divergences here on the 2-hour chart saying if I get some kind of bounce here, I'm going to go positive and maybe start a positive trend. We'll look for weakness in this move in case there is another move for volatility to go back down, in case there's another move up in the stock market. But for now, you need to pay attention to this 2-hour divergence, because 2-hour divergences like to roll up daily charts. What do we possibly have right now on the SPY and the Qs? This is what you need to pay attention to when it comes to volatility. You need to see similar signals on volatility and the SPY and the Qs all at the same time. That is where you can be convinced. And most of the time with volatility, since this is the VIX, it is just the S&P 500. If you see some kind of reversal signal forming and you see that same reversal signal in the opposite direction on the volatility, that is when you really pay attention to it. That is when the technical analysis is good. So you need to pay attention. It doesn't mean it has to happen. Everything in the market is a probability, right? But right now you do have a 2-hour divergence here. And what do you have on the SPY? Well, you have a SPY that has a 2-hour divergence right there. So if that 2-hour starts to curl over, we could see volatility turn up pretty quickly. And then pay attention. You might get some rigged moves on Friday, but next week the floodgates might be open genuinely, because this 2-hour could flip up the daily, and the daily just crossed over. What's it giving you? It's giving you another point of divergence here. So it's giving you that point of divergence right here. This was overall the higher low. Now we're getting that point of divergence for possibly a double bottom, and boom, this thing could really take off because it's closer to the center line. Look how it's closer to the center line. The last time we were at these prices, this is where we were at on the MACD, a little bit further. Now we're closer. So if that turns up starting on Friday, we could be seeing something very dramatic in the market. Now, I'm going to say that right now, I truly believe that will be maybe a little bit more dramatic pullback that then leads us into more upside throughout until the election. But if things start to blow up right now, I think that we're in a domino effect. I think it's just if the tiny little domino falls first, it's going to end up knocking over bigger and bigger and bigger dominoes as everything unfolds. So I'd be very aware of what's going on geopolitically. I'd be aware of the fact that there's a hurricane out of nowhere. Geopolitical, everything is turning up. Like I said, the stock market's like real life, okay? When one thing turns over, it might be like, hey, all the TNT boxes are lined up together. Like when you play Call of Duty, you shoot one, what happens to the other ones? They all start to blow up. And I think that is what is going to go on with our economy, with pretty much everything around the world over the next year or so. So we'll pay attention to that. Going forward, just the main takeaway for this video is pay attention to your risk. Really pay attention to your risk in any trade, because we're going to probably see some continued rig moves. I will be updating you based on what happens with the dollar overnight tonight. But the main thing here is have fun with your family today. Truly have fun with your family. I know we talk about managing risk being very important and all those things, but for today, it is one of my favorite holidays. I really, really enjoy the 4th of July just because you get to see a bunch of family or friends. You get to light some fireworks off and really celebrate the fact that freedom is what we are really fighting for every single day, and freedom in trading stocks is what we are fighting for with AMC and GME. So I really appreciate you guys watching. I just encourage you to have fun with your family and just know that freedom is never guaranteed tomorrow. So we have to celebrate while we can and get ready back the next day just to fight for our freedom every single day. So thank you guys so much for watching. Thank you for liking, subscribing. You guys are fantastic. I look forward to going live with you guys tomorrow. I think we might see some fireworks. So I'll talk to you guys later. Peace.